Hello and happy Sunday. I hope you guys are doing well. Today I'm going to show you a portfolio you can use. As an example, on a $25,000 investment, I use some growth stocks that pay some dividends to give you an idea of what kind of passive income that can generate for you. Stick around through the video and I'll outline the 10 stocks that I chose and what they pay, along with the companies a little bit and a little bit more as I go through the video. Good morning. My name is Adam Kahn and I'm the Rational Investor. Today is Sunday, October 12th. I hope you guys are all doing well. Before I forget and get into the investment for you and how I separated it, do me a favor. If you haven't already, hit that subscribe button, smash the like button. That helps YouTube's algorithm and helps other people find me as well. I hope you don't hear the plane as loud as I do. Um, but I really appreciate the support. I've been super excited to see the channel growing and people chiming in and asking questions. So cool to me. So I want to thank you all. On top of that, if I'm able to today, I'm going to put a couple links in the description on how to open an account with SoFi. I use them as well. I open an account with my son and I, and if you use the link, not only if you deposit $10 will it give you an additional free $25, it gives him a little bit of a gift, which gets him kind of excited. I'm trying to teach him a little bit about investing as well, and he's 13 years old. I'm not sure that it's the path that he's going for, and I don't know that he's always interested, but he does listen, and I like to share it with him, and he gets really excited when people do that. So I thank you for the kindness, and I also appreciate that support as well. More important to like and subscribe and chime in and check around from time to time. But let's get into the portfolio, and I'll go over the ones I picked, and we'll go from there. Basically what I did is I took 10 different stocks that I like, all that paid dividends, and I did it equally weighted in a $25,000 total investment where I was putting approximately $2,500 per stock. I tried to round it off so it's a little bit less than 25,000, but this will give you an idea of if you pick some growth stocks that actually have some dividends. I tried to push to a decent return without going too crazy. I know that there's stocks out there that pay higher dividends. You have to be careful. Dividends are never guaranteed. And for the most part, any investment that you make, the higher the promise, so the higher the dividend when I say promise, the less likely it is to grow. I mean, it's just a straight math formula that the higher percentage something is giving, it's taking more risk to do that. And if it's a regular stock that's intending to grow, if they're paying out a higher dividend, somewhere they actually have to make that money to be able to pay that dividend. Which is why I say it's a little bit more risk depending on how you look at the risk to be able to pay that amount out. That being said, let's start with the first one I have in my list, which is Cisco. Cisco, I love. It's a great company. They pay a dividend. They've been around a long time. They're kind of something that nobody really talks about anymore, which is why I like them so much. Based on Friday's close, $2,500 gets you about 47 shares of Cisco. Cisco's paying a 39-cent dividend right now quarterly, which comes out to $73.32 for a year. So I'm not putting any of the stocks in any particular order. I just kind of picked the 10 that I like for the example in this video. And I'm going to go through them one at a time, all as $2,500 investments. The other thing to keep in mind is you guys need to do whatever research you need to for the investment that fits you. You shouldn't necessarily follow me in the instructions I give. I'm not a financial planner. I'm just sharing the information because I like this stuff, so I do it anyway. And I've been enjoying YouTube, so I go on here and talk about the things that I'm researching. But you really need to do your own research for what you invest in and not follow my advice. Just use it for entertainment purposes only. The next stock on my list I have is Pfizer, and based on Friday's close, $2,500 will get you about 85 shares of Pfizer, which is paying 41 cents a quarter right now. That 41 cents on 85 shares comes out to $139.40 over a year. What I like about Pfizer is they're a big pharmaceutical company. They've been around a long time. They've lowered their expectations in terms of their income over the next few quarters, but they seem to have a lot of room to be able to pay out that dividend that they're offering. Next on my list is one that I really like and I tout from time to time. I own it myself. I own Pfizer as well, and I own Cisco, and I'll try to make a delineation of the stocks I own and don't own so I don't forget. So it's full disclosure on that end. The next one on my list is Cracker Barrel, and for $2,500 you can get 37 shares of Cracker Barrel based on Friday's close. They're paying about $1.30 a quarter right now, and that's $192.40 over a year. Now, keep in mind, dividends are not guaranteed. If a company slows down and business isn't good, they might lower the amount they pay in a dividend, or they might cut it completely depending on what's going on. Disney used to pay a dividend, and while I still like Disney, they don't pay a dividend anymore. And that's just something to keep in mind. Like when things get rough, things can change. The next stock that I have on my list is Target, which I've talked about in a lot of videos. Maybe I'm wrong on them, but I feel like they're really undervalued right now. Big company, been around a long time, pay a nice dividend, totally out of favor for retail's out of favor in general with the Fed raising rates and the economy slowing down. Um, I still think they're good value. That doesn't mean you should. You need to check it out and decide for yourself. But based on the close on Friday, you can buy 23 shares of Target. It's paying $1.30 in their dividend. I'm sorry, forgive me. It's paying $1.10 right now in their dividend each quarter, which comes out to $101.20 if you hold it for a year. Um, I like the Targets had some bad press in terms of having to close some stores that were underperforming. I think that's created good value here. Next on my list is Foot Locker. Foot Locker has some risk to it, but I like the CEO they brought in about a year or so ago. Um, she was the one who took Ulta Beauty and grew it immensely. She wanted to work for Foot Locker, so she reached out to them and they brought him on. You get 120 shares of Foot Locker based on Friday's close. They're paying 40 cents a share. Comes out to $192 over a year. Um, I think there's some risk in Foot Locker, but it's a company I really like, and I really like the CEO. As long as they're able to pay that dividend, I find it's good value here, around $20, dropped below. Um, Also, keep in mind a few of these stocks have their quarterly report coming up soon, so the price could change pretty dramatically based on where I'm doing the recording today. The next stock that I picked for the purposes of this video, which I also own, and I also own Foot Locker and Target, is Dow DuPont, which ticker is DOW, just Dow. I like the space that they're in. I think there's good opportunity there. 3M is okay too, but 3M has some lawsuits going on that are legitimately scary in some ways. And while 3M has a little bit higher of a dividend, I think there's more risk in it based on what's going on those lawsuits. So from Friday's close, you can buy 50 shares of Dow. It's getting 70 cents a quarter for the dividend, which is $140 for the year. RTX, or formerly Raytheon, is the next company I picked. Um, I like Raytheon a lot. I think it's a good investment. And most of the companies, and I don't own Raytheon, and most of the companies that I picked for this list, I tried to pick ones that have a potential growth potential, as opposed to something like JEPI or JEPQ, or some of the ones that are really strictly intended for dividends and not for growth in the company. I'm hoping these, while they might have lower dividend payouts, have ability for the stock price to go up as well. There are real benefits to stock price going up versus dividends. Dividends you're going to owe taxes on. If you just buy and own a stock and it goes up over time, you're not going to owe taxes until you sell it, and it's also going to be capital gains taxes. So if those laws don't change, now you need to talk to your tax professional on this, not some guy on YouTube. And really, whether that's me or any of us, I wouldn't be taking tax advice or things like that from people chatting on YouTube. But if the laws don't change, long-term capital gains have some benefits versus income. So if you just buy and own a stock and it goes up, well, there's some tax benefits to that. Now, the negative is, unless you sell it, it just sits and it grows like having in a savings account. Anyway, 30 shares of Raytheon, it's paying 59 cents a quarter in the dividend. That comes out to $70.80 for the year. Number 8 on my list is one of my favorites, and also another one I do not own, but probably need to add to my portfolio, which is Coca-Cola. I feel like whatever goes on in the economy, people are going to be drinking Coca-Cola products ticker symbol KO. Based on Friday's close, you could buy 44 shares of it for about 25 cents, $2,500. That would be a great deal. Um, and they're paying a 46 cents dividend every quarter right now, which comes out to $80.96 for the year. Number 9 on the list is another company I love and don't own. I like them because the space is tough for anybody to get into and compete against them, which is Archer Daniels Midland. I think they have good growth potential. I think they're in a space that they really dominate that space. So I really like them as a company. Again, they don't pay quite as high a dividend, but I think that allows for the company to continue to grow in terms of stock price too. Do your own research. Don't listen to me. So based on Friday's close for $2,500, you get 34 shares, which is paying 45 cents a quarter right now. Comes out to $61.20. And then the last company that I have in here was to get a little bit of a dividend boost. I picked MO Altria Group, which is the U.S. part of Philip Morris. Um, they're paying almost a 10% dividend based on Friday's close. I've owned them for a while. I like the dividend. The stock hasn't performed so great over the past few years, so I've lost money in the stock ownership, but the dividend is a nice big dividend, and me being a bit of a dividend junkie and saying dividend 4,000 times in the video by accident, um, it's a nice quarterly payment to help boost that percentage up a bit. So based on Friday's close, you could get 62 shares. Again, the ticker symbol is MO, and it pays 98 cents per share, which comes out to $243 over a year. So if you put $2,500 into each of those stocks and held them for a little over the year, and their dividends didn't change, that comes out to a little over $1,290 for the year. And if you want to divide it out monthly, it comes out to a little over $107 a month. Now, I know that's probably not a ton of money and it's not anything to retire on, but it's a great start on a really reasonable investment. And it also includes a bunch of stocks that actually could grow in stock value as well. I know I did another video just on dividends and I used a larger amount of money as well as a higher return on the investment. This is just to give an idea to people in terms of if you bought stocks that could grow as well that also pay a dividend, that you still get some return. It's not so bad, and it's pushing what, a little over 5% in terms of annual income. So on a $25,000 investment, getting $107 a month, that'll offset a cell phone bill or possibly going out for dinner a couple times with a friend or whatever it is that you guys do in your normal life. Um, we'll do another video later in the week or next week or in the following weeks on how to generate maybe 5,000 a month and maybe even one that we can do 10,000 a month. But I just wanted to do a little bit of a smaller one, show some different stocks, a different avenue to go instead of just looking for dividend return. For me personally, as I've been getting older, I've been moving out of the ones that are a little bit more aggressive in terms of growth and share their returns a little bit. That's just because of my age and where I am in life, which is really why I advise to you guys to do your own research, seek your own financial advisor if you're in that position to have one, because it's really more personal to each person and what is going on in their lives and where they are. When I was young, I wanted all sorts of stocks that didn't really pay dividends but had potential for growth, like the Facebooks and the Amazons and things like that, and then it's just kind of changed over the years to what fits me now. Same with investment properties and other things, and whether it's Bitcoin or collectibles or whatever. So again, before I go, do me a favor: thumbs up, subscribe, make some comments. I really enjoy that. I like getting other people's feedback. Some people have some really good ideas and information on things that I've looked at as well. So enjoy the rest of your Sunday, and I'm sure I'll talk to you this week.